Apologize for yesterday. Yesterday there was no episode. I am super under the weather at the moment. I've got a nasty, nasty cold, but I had to come live today. And obviously I had to come live, number one, for you guys as always, and number two, because we have CPI today. All right. Now, a lot of you guys don't actually understand what CPI is, and a lot of you guys don't know what to do with the news of CPI. So I wanted to make an episode today where, of course, we go through TA, we go through Bitcoin, Ethereum, and so on, but also at the same time, along with Bitcoin, Ethereum, and the news, we go over what CPI is and how it actually affects everybody. All right. One of the things I had in trading when I was learning, I was getting all these keywords and I was getting all of these sort of, how do I say this? I was getting all sorts of keywords, right? I was getting all sorts of different explanations as to what things were, but nobody took the time to really sit down and explain to me how it affected me and my daily life. So I'm not sure how it is for most people, but for me, when I'm learning something, I need to have examples that affect me, examples that I can go back and explain to someone so that they can understand too. But I don't really see that often. So today we're going to talk about a few things. All right, we have got news today. You've seen the headline, but for the beginning of the episode, we're going to talk about what CPI is, what the dollar is. Well, not what the dollar is, but what CPI is, what's going on with the dollar, how CPI affects the dollar, how CPI affects the stock market, and ultimately what it means for Bitcoin. And I'm going to try and break it down for you guys as much as possible. So make sure you guys are liking the video. Make sure you're subscribing to the channel if you haven't already subscribed to the channel. Thank you for being patient with me. I'm seeing some amazing, amazing comments already in the chat, but we're going to move straight into the show. All right, we're going to go straight into the show. So what I'm going to do is I am going to share my screen. And there we go. Bear with me, guys. Okay, right. So there we go. So can everybody hear me perfectly fine and whatnot? Is the audio good? Is everything good? Just a quick mic and visual check, that's all. Yes, I'm back online, Derry. A big shout out to Derry, to Joel, to Hafu, to Dicky, to Frankie, to Stephen. Amazing. I love to see you guys. I love to see you guys. You guys are all awesome, especially the ones who consistently tune in every day along with me. I appreciate all of you consistently. I do. As consistent as you guys are with me, I appreciate you just as much. All right. So look, let's dive straight into the episode. So number one, what is CPI? Okay. CPI is the Consumer Price Index. Now, that's just a key word, right? That doesn't mean anything to anyone, does it? Yeah? In order to understand CPI, you need to understand inflation. Okay? And to understand inflation, we need to understand what it refers to. We need to understand what inflation means. Okay? John, sorry, welcome to the show. You're not late, John. You're not late. We're just kicking the show off now. Don't worry about it. We're good to go. We're getting right into it. We're just getting warmed up, my friend. So you're good. You're good. You're good. You're good. All right, perfect. So look, number one, what is inflation? Inflation refers to a rise in the general level of prices, services, and goods in the economy. Okay? So, well, what does that mean? What does that mean? When I'm talking about the price of services and goods in the economy, what does that mean to you? What that means to you is we're talking about things like food, things like, housing, the cost of housing, things like clothes, things like transportation. So you're talking about the bus, the train, whatever you use to work. Maybe you're talking about fuel for your car, all right? And it refers to more things as well. Overall, I mean, this doesn't cover everything, but this is sort of what it refers to. Okay. Now, if you take the market for what it is, then you're going to see that the market goes up and down. That's all the market does. That's all it ever does. The market goes up and down, up and down, up and down. All right. Now, if you have inflation, say for instance, inflation goes up, all right? This is how it is going to affect you. I'll put my camera on for this. This is how inflation would affect you. Let's say, for instance, all right, in the year 2020, you, Mr. X or Mrs. X, you have $100 and you say, okay, I'm going to do the family shopping this week. I've got $100. I'm going to buy some biscuits, some bread, some milk, some tea bags. I'm going to buy some food, whatever. All right. And you've budgeted $100 for that week. Okay. Now, you're used to doing that. Every single week, you spend $100 on your food. You spend your $100 on your food, on your housing, on X, Y, and Z. That's what you've budgeted for. All right. Now, 2021 comes along and inflation has hit. All right. Now, what happens is you're still going to shop to the shops. You're still going shopping, but you've got to now spend $105 in order to get the exact same things that you wanted to get, that you were buying in the last year. Does that make sense? Okay, cool. Why am I so grey? Well, I'm wearing a grey t-shirt and the background is I don't know how to answer that question. I'll wear a more colorful t-shirt tomorrow, I guess, when Charlie comes on. But anyway, look, let's go back to CPI. All right? So you've now got to spend $105 for the week in order to make up for that. But that's $20 in a month. So you're thinking to yourself, okay, hold on a second. I need to make $20 now. All right? I need to find an additional $5 a week in order for me to continue buying what I'm buying every week. Okay? And let me put my screen back here. And if you're going to be spending $105 a week instead of $100 a week at this point, because inflation has hit, then you're going to need to find a way to get that money. So if you're going to look for a way to get that money, you need to find either a better job or you need to go to your current job and demand for higher wages, right? But that also has a toll on the economy because if wages go up, then the price of services and goods have to go up to cover that. Does that make sense to everybody? So, CPI usually talks about things that affect your day-to-day life. Okay? So over here on this chart that we've got here, this is what sort of constitutes this is what constitutes CPI pretty much, okay? So food and beverages, housing, apparel, so that's your clothes, transportation, the bus, the train, your car, how you get to work, etc., etc., etc. Medical care, so like in the UK, for instance, we have the NHS. Recreational activities, so of course we're human beings. We need to be able to go to like things like the cinema and stuff like that, Education and communication, so you've got your mobile phone bills, you've got the school fees, etc., etc. Other goods and services, all right? So there's an easy sort of prostitution joke there, other goods and services, but we won't make that joke here, all right? So that is what the CPI sort of combines, okay? Now, I'm going to get somewhere with this. I'm going to bring it all back to Bitcoin in a moment. So just stay with me, okay? And if you haven't already, like and subscribe, okay? So if we want to get higher wages, okay, and if that's going to impact the economy in the way it does, then we need to still understand what inflation is. So essentially speaking, inflation reduces your purchasing power. Now, that would be okay if there was a lot of spending in the economy, if the employment rates were high and so on. But we know that since COVID hit, we've been seeing a lot of job losses. We've been seeing a lot of people losing their jobs. All right. Now, if a lot of people are losing their jobs and inflation is hitting and things are costing more, then what does that mean in terms of why Bitcoin is going down so much? How does this impact Bitcoin? Well, look. Put my camera back on here. Look, now for Bitcoin, we need to look at the dollar and we need to look at the stock market and we need to try and understand from that perspective what's going on with those. How does CPI affect those in order to understand why Bitcoin is being affected, all right? And how this is going to impact your trading, yeah? Now, if inflation is going up, that's not always a bad thing for the economy. It's not always a bad thing. maybe we are in a scenario whereby we've got a lot of jobs, we've got employment rates are sky high, and there's so much spending in the economy that we need more money to spend more. Okay, cool. That's a good scenario. That's a very rare, very, very non-existent scenario. The scenario we're in is quite the opposite. Okay, whereby the employment rates are so low, there's no money being spent in the market. The Fed needs to tighten the monetary policies. We need to turn the money printer on in order to give people money, because nobody's making any money. Nobody's making any money. So if nobody's making any money, then how do people spend money? How does the economy grow if nobody's spending any money, right? So what happens is, after the wild Fed prints as much money as they print, that goes to normal people, the day-to-day people. All right, people who have lost their jobs, people who can't afford to do X, Y, and Z, people who budgeted $100 a week before and now they have to budget 105. Make sense? Cool. That extra money needs to come from somewhere. And if you've lost your job, then the $100 a week has already become a struggle, let alone the 105. Okay? So inflation hits, and the Fed, they turn on the money printer. They turn on the money printer and they say, okay, look, we're going to give stimulus to everybody. We're going to back everybody. We're going to give them checks. We're going to give them money. We're going to help the economy boom again by giving people free money. They can go back into the economy. They can buy things like food, beverages, housing, apparel, transportation, medical care, recreation, education, etc., etc., etc. Now, the only issue with that is that money is going to finish at some stage. All right, that money is going to get used up. And when that money gets used up, the inflation rates are still going to stay the same. If not, they're going to go higher. All right. So then what happens then? How does it impact anything then? Well, what happens then is we don't do anything, but the Fed has to do something. So the Fed turns around and the Fed says, okay, well, look, I've got to now tighten the monetary policy. Okay, I've got to now tighten the monetary policy. I've got to change things. Okay, and for me to change things, I'm going to need to take that money out of somewhere. I'm going to need to limit spending somewhere. Someone or something is going to have to take the hit. So I saw an interesting article today. Ignore this title. Ignore this title. I mean, we're already at what, 8.6, 8.8%. So we don't need to we can ignore that title. So it says here, God, what's this? So it says here, inflation may finally be past its peak with gas prices pulling back since mid-June. We're going to cover why that's happening as well. All right. When we look at dollar today, we're going to look at the dollar in a few minutes. All right. We're going to get to the charting in just a moment. But before we do, I wanted to help you guys understand what CPI actually is so that you guys can understand how it impacts the dollar, how it impacts the S&P, how it impacts Bitcoin. All right. Once you guys understand it, then when we're drawing out patterns, when we're drawing out support and resistance, etc., 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 you guys have a clearer understanding of why you're doing that. Okay. There's no point saying something is at support when we know that we've got cataclysmic news coming out a couple of hours later. Make sense? It will help your trading from that perspective. So the CPI rate, inflation rate, is seen hitting 8.8% through the Deutsche Bank economists Deutsche Bank economists are predicting 9%. The hot inflation data will compel the Federal Reserve to keep aggressively tightening monetary policies, pressuring stocks. And that is the key sort of line that you need to take away from this article. All right, it's a huge article, but this is the key line that you need to take away from it. Because as the Fed tightens up their monetary policies, it puts pressure on the stock market. And what is the stock market? The stock market is the S&P. So from this point, let's dive into the charts now to try and understand what's going on. All right. And we're going to start with the dollar, right? So with the dollar, this is the yearly chart for the dollar. All right. And you know how I like to do things. I like to do things with where's price trapped, what the story is. I'm a storyteller trader. Before I can plot support and resistance, I like to look at the story. Okay, so there's a few things I can already see on this chart. Let's have a look together. All right. So price went down, price went up, price went down, found the bottom, went up, but this was the up move that caused the market to achieve new lows. Okay, let me remove all of this and let me make it clearer for you guys. There we go. All right. Derry, that's a fantastic comment. I really love it. If you guys are understanding CPI better, let me know. Let me know, because if there's anything that I can do to make it better, I want to make it better. We're going to cover all these things as we go along. All right. But make sure that you guys are dropping the comments in, because otherwise I don't know if you guys are getting it or not. All right. I'm not quite my big bro XO, but yeah. So anyway, right. So again, this is the story. All right. Price went down, price went up, price found the bottom. All right. We took out these lows and we bounced. All right. Now, this up move here, this move was the move that sent the market to brand new lows. Okay. Why is that important? Why is this up move important? And why are these lows important? Well, now we have a base point. We have a base point. Okay. We can say, okay, we have two base points. We have the highs here. All right. We have a swing high here and we have a swing low here. So what I'll do is I'll mark out a range from this high here and I'll mark it to this low here. And what do we see? First, we need to make sure, before we look at anything else, yeah? I know a lot of you guys already have answers, but before we look at anything, let's first look at the mid-range, okay? The mid-range is a different color because it's so important, all right? Now, with the mid-range, is it being respected? Well, we're seeing a lot of choppy price action in this mid-range. We're seeing deviation, get back below, and resistance, and then we're seeing deviation. Now we've gotten above. If you look here, this is the 12-month chart. This is the yearly chart. So, of course, we're not going to see as much detail as we want, but we retested the mid-range, and now we've pushed up. So, for me, price is respecting the mid-range. This looks like a very fair range to me, all right? We can see what happened here in the last 25% of the range. We can see what happened between the 25% and the 50%. And we can see what's happened as soon as we broke above the mid-range. We wanted a reaction above the mid-range, didn't we? Yeah. And now that we have a reaction above the mid-range, we've shot straight into the 75%. So what does that mean? Effectively speaking, the dollar is at resistance, and we can't ignore that. Why is the dollar at resistance? Because of basic supply and demand. So we've plotted out a range here. We understand why we've chosen this high. This was the up move that led to new lows. This was the low that was established where the market bounced off. All right. What about this though? Is this not basic supply and demand right here? And does it not fall exactly into resistance where we've marked it out here? So I'm not insinuating that the dollar's going to pull back here. All right. I know that we have CPI today. What I can tell you is that it will be volatile. Yeah. We've got higher lows and higher highs. Maybe we dig in a little bit deeper. All right. If we look at the 6 month, for example, to me, we are at resistance. Maybe we can go as high as this point here. As we dive into the chart, we'll find much deeper targets. All right, but we're just looking at it from a higher time frame, just so that we can build a story. All right. Now, could we do something where we push into here and do that? That's a very long way away. That's a very long way away because this is a 6 month chart. We can't base a trading plan off a 6 month chart, but we can use it along with a yearly chart to help identify the story. And the story is we are right at resistance. Okay, so let's continue. Let's keep going down. There's not much to get from that. Again, on the 3 month chart, what are we seeing here? It's more of the same thing. We've got a bit of an inefficiency here, which we filled here. We consolidated around the mid-range, and now we've pushed up. And we've pushed up right into resistance here at pretty much 109. So from a charting perspective, this is resistance. Is this a flat body candle? Oh my God, look at this. So from a charting perspective, this here, 109, is resistance. We've got flat body candles here. If this was a 5-minute chart, or if this was a 15-minute chart, or if this was a 30-minute chart, I'd be expecting these to be filled in. Okay. Now, if we're going to be bullish, if we're going to hold, wouldn't it make sense to retest this mid-range and then push back up? Okay. Do we have an example of a flat body candle that we can use? We have one here. We have one right here. We have one right here. And notice how the market always came back to fill it in. Sometimes immediately, sometimes it took multiple months in order to come back and fill these in. All right. Now, once the market filled those in, then the market reversed into a different direction and did what it did. So now we're starting to see the same thing. All right. Look, we've got another one right here. Market right here. Where did that go? Here, here. That's not really a flat body, is it? Hold on. No, that's not a flat body. It's here. There we go. Right. Notice price went all the way up. Each candle is a 3-month candle. Okay. Price went all the way up. It took years. It took 3 to 4 years before price came down and filled in this candle. It's a very, very particular phenomenon. All right. I'm not sure why flat body candles always get filled, but they do. It's something in FX, very, very common in FX. It's something that a lot of traders look out for. There's no retail, just pure institution buying it up and pushing the price in the direction they want it to go. All right. But of course, we can use it as confluence, can't we? So, for instance, if we are at resistance right here, if we're gonna class this as supply right here, okay? Because this looks like a block, doesn't it? Right here, albeit a very aggressively big block, but it's still a block. So, if we're going to be pushing into resistance here, all right, and we've got these two flat bodies here, to me, it looks like we should start maybe potentially preparing for a pullback, or maybe, as we've been talking about on this channel previously, a relief rally. All right. So let's continue to dive deeper. All right. This range, we've proven now that this range is a very important range. And it's the range that the dollar has actually been sitting in. All right. Now we're on the monthly chart and things start to get a lot more clearer. Okay. Things get clearer. We can still see demand. We can still see supply here. We can see resistance here. We can see what happened when we broke the mid-range, and we can see what happened when we got back above it. Okay? So all this is doing at the moment is proving that the mid-range is true. All right? The mid-range is true. Let's mark out this here, okay? Because this might be something that we're going to look at later on. Now, the good thing about this is make sure that you're paying attention to the fact that we're on the monthly time frame. Because we're on the monthly time frame, there's about 1,000 ranges in between all of these, all right? The price difference between this level here and this level here is 11.5%. Now, 11.5% for something like the dollar is not the same as 11% on something like Bitcoin. Okay? Bitcoin can do 10% in 5 minutes. The dollar takes maybe a year or two to do something along the lines of 12%. Okay, in a very aggressive, volatile environment, yeah, the dollar will do it in maybe a few months, but it's not the same as Bitcoin. So make sure you take that into account when building your story, because we are going to break it down. We're going to look for little blocks, etc., and we're going to look to see what direction the dollar might be going in. Okay, but we're going to keep this box marked out here because that is the mid-range. We've confirmed that is the mid-range now. We're getting so much choppy price action here. Deviations, retests, sell-off, push back above. It doesn't hold, breaks below, instant sell-off, gets back above the mid-range, hold, confirmation is right there, and voila, we're off to the 75%. Okay? So let's dig even deeper now. Let's go into the weekly and try and understand what's going on here. Now, from here, we can see what the dollar did. So we've got some levels here. Just 1 second, guys. Bear with me 1 second. Welcome back, guys. Sorry about that. So from here we can see, all right, this looks like a very parabolic move here, doesn't it? Right? In a similar fashion that we had something like this, We're getting something along the lines of this. Now, why did I choose that? Why have I chosen this type of fractal here and I've compared it to this kind of fractal here? Why have I done that? Well, I've done that because what happened when we hit support here? We hit support here and we had a pretty aggressive reaction, didn't we? And now we've hit resistance. Maybe we'll get an aggressive reaction. In the past, have we had aggressive reactions? We've had one here, haven't we, where we sold off completely. We've had one here where we've sold off completely. We've had one here where we've sold off completely. And we've had one here where we've sold off completely. So now we're at resistance. All right. Am I expecting it to just drop in one go? Not necessarily. I'm not expecting it to drop off in one go necessarily. Maybe we consolidate a little bit before we drop off, but I'm not sure that we're going to get above and push up. Now, the reason I say that is because we need to take into account what the dollar has been doing. So what we'll do is we'll dive into one more time frame and then we'll move on to what kind of damage this has done to the overall market. Okay. So if we zoom out like this, again, we're seeing a very strong uptrend here. Okay. Notice how we've not taken out any of these lows. We've gone up, higher low, 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 higher low. We had one pullback, higher low again, and now we're not even making any lows. We're just pushing up. This is euphoric, isn't it? It's euphoric. That's the reality of it. All right. So we do need some sort of pullback. Now, if we were to get a pullback, where would be the most logical place to pull back to? Okay. If we're going to use this as a range, if we're going to use this as a range here, and we'll mark it out here, right on the mid-range, right here like that, then does this range respect? Let's have a look. So we've got resistance, resistance, break above and hold, and push up. Get back above, push back into the mid-range, deviate the mid-range, so we have invalidation, get back above the mid-range, push up, and now we're pushing back into resistance. So if we were taking this as a range, for example, then we have targets to play for, don't we? We even have a confirmation plan right here. So the two confirmation plans for the dollar would be something along the lines of this. If we get above 109, okay, and then we get back below, well, then we're breaking back into the range, aren't we? And if we're breaking back into the range, then we'll look for some sort of sell-off in order to get to here. Now, a safer plan for macro swing traders would be to get below this level. This was the high that was made before the market got sent back up, right? And this was the low that was made. Okay? So this little area here is an area of interest to me. If I take out this high, if I take this high here, then what I'm waiting for is price to come back down here, retest here, and then we are back. We can start looking for these price points now, okay? To sell off and push to take out these lows, okay? So that's pretty much what the dollar is doing. We've taken the dollar from the yearly chart. We found the range for the dollar. We found ranges within the range, and we know what we're going to do to trade it. Well, not necessarily trade it. I don't think anyone actually trades the dollar, but just a higher time frame range to help understand what is going on with the dollar, what the story behind the dollar is, and how it's going to affect Bitcoin in the future. Okay? So we're going to get to that. We're going to get to that. We are almost there. All right? For those of you who have been watching, if you've been watching up till this point, then you've got a few things here. Number one, you understand CPI. Number two, you're understanding slowly what the dollar is doing. Okay? We're going to start putting it together now. So we spoke about the Fed monetary policies earlier on, didn't we? Okay? And we're gonna bring that up again in just a few moments. But first, I want you to see what kind of carnage the dollar has left behind it. This is a very old chart, so let me remove all of this. This was when Trader NJ was a FX guy back in the day. Okay, so for the first time in a very, very, very long time, okay, let's get the exact accurate dates for us. For the first time since 2002, yeah, the dollar has overpowered the euro. Okay, that is huge because we're in 2022 now. Okay, the euro was stronger than the dollar for many, many years, over 20 years. And for the first time ever, well, for the first time in since I've been an adult, I was a child back when this happened, right? The euro has now broken below the dollar. Of course, right now it's holding a little bit higher. However, does this look bullish to you? No, it doesn't. To me, it doesn't look bullish to me. All right. The only way that this could look bullish to me would be if it did something along the lines of this, and we have to use the higher time frame for this. We have to use the higher time frame. The reason we have to use the higher time frame is because this is where it's happening. It's not happening on the 15-minute chart. This is all happening on the higher time frame. So why have I plot this support? Why have I plot this support level out? I plot this support level out because this was the first low that was made after the sell-off. We consolidated here, deviation here, and as soon as we deviated it, we pushed back up. All right, and we held it until we've come back below. Now we've come back and we've taken out these lows. A lot of people are wondering, are we going to take out these lows here? However, the dollar is at resistance right now. So if the dollar is at resistance right now, then how can we be certain that these lows are the lows that we're going to take? And also, if we were looking for confirmation on a chart like this, wouldn't we want some sort of pullback first so that we have some sort of invalidation? At the moment, there's no real invalidation, is there? We broke below this level and we've held below it. We just sort of shanked off. We've got 56 people in the live chat. I appreciate all of you. Make sure you're smashing the likes. If you're not subscribed to the channel, it takes a quick second to do it. Bottom right hand corner, make sure you do it. Help support the channel. I'm going to bring more episodes for you like this every other day. So let's get straight back into it. So again, as I was saying, we just broke below. We didn't really retest or anything like that, We didn't even get much of a wick. Okay? We didn't even get much of a wick. And therefore, it makes you wonder, if the dollar's at resistance and if euro's behaving like this, then maybe now isn't the best time to trade. Okay? And what I mean by that isn't because we can't trade. It just means that the type of volatility we're going to get might set up a solid trade in the future, a trade that could make you a lot more money with the right kind of confirmation. For instance, if we get above and we push below, isn't that the kind of short that you want? Because at the moment, your invalidation would be here. And that just doesn't make sense as a trade. It doesn't make any sense at all why somebody would trade this. And I don't think anybody would. Because the type of money that you'll make from that kind of trade, it won't give you the returns that you're looking for, whether it be small or large. All right? So we need some kind of invalidation to short. Now, another thing that we need to pay attention to is what would happen if this was a deviation. Like, nobody has sort of really spoken about that. What happens if this is a deviation? Look here, support, deviation and support, and then we push up. So if we're going to look at Euro USD, maybe we need to look at it from this perspective. So if we'll take this high here and we'll mark it out here like this, and then we'll push it out here like this. So maybe this is how we need to look at Euro USD. And look, let's see if the range is true. Okay, let's see if the range is true. Mid-range. Is the mid-range holding? Yes. Resistance, 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 break down and sell off back into the range low. But the fifth time that we came back up to this mid-range, it was always going to break. All right. Now, in hindsight, this is always it's always easy to talk about in hindsight, right? But that's the only way that we can learn. So that's what we have to use. Now, we've seen that 4 taps of this mid-range. On the 5th tap, many months later, we pushed above it. Now, look, when we sell off and we break down, we've got confirmation here, okay? We sell off, our target would have always been the 25% of the range. Because when we're playing ranges, we play from here, we play from here, we play from here, and we play from here. Especially when you're playing on the higher time frame. When you're playing on the higher time frame, you've got to respect these blocks even more so. All right? So we were always going to go back to the 25% of the range. Okay, that was always going to be our target. And look, once we got something along the lines of this, once we got a deviation above, We had our invalidation. We held the short, and look, okay, it was an extended target. Price hit here, which is a lot further away than what we wanted, but we made our money. We made our money right here at the 25%. We've had a meat of the move. We've had a huge, huge portion of the move, and we can now focus on other targets. So look, for Euro USD, to me, this looks like the range. It looks like the right range, okay? And the 75% of this range looks to me just the way that the dollar looks, all right? This is quite a euphoric move here too. So what would happen now if we broke back inside the range? If we went back inside the range and we held it here, I would argue that we'd be looking for a push up into the 25% of the mid range, into the 25%, the mid range between the mid range and the range low. All right. I would argue that that would be possible. Now, it's difficult at the moment because we've had no confirmation here. So if we push back up, are we pushing back up for a retest and then sell off? Or are we pushing back up for a break into the range and push up? It's very difficult to say. We're only going to really know when price gives us that opportunity. Okay. Once price establishes itself and gives us the opportunity, that's when we'll know. As long as we have confirmation like this, or as long as we get some sort of confirmation like this, I've noticed price do that a lot. So price makes a low, it comes back up, it makes a higher low, and what it does here, after it makes a higher low, it starts pushing up. All right, we've seen it. Look, here is an example: low, um, sorry, sorry, low, higher low, confirmation, and then push up. So low, higher low, confirmation, and then push up. Make sense, everyone? But I know this is an aggressive learning session. I do appreciate this is a very aggressive learning session, but this is one of those episodes where, next month when we have CPI, you can come and watch this episode and say, do you know what? It's only a month later. If I want to understand what CPI is and how it impacts the market, especially from the dollar perspective, from the S&P perspective, from Euro USD's perspective, this is how we do it, you know? So again, if we look at GBP USD, again, how long is it going to be now at this point, because we're selling off so aggressively, how long is it going to be before we are talking about the dollar taking over the pound? And it's because of inflation. It's because the Fed continues to tighten the monetary policies. It's because they continue to do that it applies pressure on the stock market. And the more pressure that it applies on the stock market, the more we're going to see the dollar rally. Okay? Now look, let's look at the S&P. All right? Now these levels are from an episode that I did a good few weeks ago. All right? And we're going to keep those levels because we know why we had them. This was in a much more previous episode. I think this was the episode where we spoke about the Fed basis points. Okay? So what's happened here? So on the monthly, we can see that the S&P hit monthly support. This was monthly support. And we said any pullback into this blue box here would be a potential buying opportunity as long as we held above this blue line. And what did price do? It did exactly that. We held above this level. We made the low, we held above this level, and we started pushing up. But now it looks like we're starting to slow down. Okay? So if we go to the weekly, I'm actually going to remove all of this. If we go to the weekly, what can we get from this chart? What can we get? Well, we've got some lows here. Okay? We've got some lows here. These lows are important. They seem important. Okay? And we've got some highs here. To me, that looks like a range once again, and I bet you the mid-range falls around here as well. Okay, right there. I'm betting the mid-range falls around there. So what we'll do is we'll take that. We'll find a range from this as well. So what we'll do is we'll take these highs here, and we'll go for these lows right here, and we'll try and understand the same sort of picture. So something like this. All right. So to me, it looks like the S&P is in fact in a range-bound environment. Okay, it is in a range-bound environment. We've got the lows here at 37. Okay, and we've even got the deviation. We've even got the very small deviation here, which because it's the weekly chart, it's actually bigger than it looks. Okay, does the mid-range hold? Yes, it does. We've got resistance. We've got resistance here, break down, break above, deviation, deviation, confirmation, and then we push up. Okay, can you guys all see that? I know a lot of you guys always ask for confirmation, but this is the confirmation. Let me show you. This wick here, this wick just above this X, that's the confirmation. Okay, that's the bullish price action that you want to be looking for. All right, and then we pull up, we push up. So if this is the range that SPX is in, then have we really done anything wrong here? You know, what are the trade plans for SPX if we're in a range? Well, number one, we need to take into consideration the 25% of the range, and we need to take into consideration the bottom of the range low. Okay, so we've got 3950 and we've got 3700. That's a roughly around a 250 point. That's roughly a 250 point sort of average in between those ranges. Okay, now ideally, what we want to look at is we want to look at buying the range low or selling the 25% of the range, unless we break above and hold. So look, what are the two trade plans for the S&P? If we move down into one time frame lower, we've got something like this. We've got something like this. Okay. Now, unless price breaks below here, that's the only time I would consider looking at these lows. That's the only time I would consider looking at these lows. All right. What I would wonder is if we are in a range, if we are seeing resistance in both horizontal and diagonal, then what I'd be looking for is something along the lines of this. So say, for instance, the news comes out today, the CPI news comes out today, and it's not good, right? And we do something like this. If we break below the range, fine. If we deviate below the range, fine. If we get back above and we do something like this, stop loss would be there and I'd target the mid-range. Now, I know that given that this is a daily chart, this is a swing trade. It's a very, very wide swing trade. And I know a lot of you guys want to trade on the 10, 15 minute chart. I get that. But this applies to all time frames. So anything I show you on the monthly, on the yearly, on the weekly, on the daily, it applies. The same thing applies to the hourly, to the 2 hourly, to the 4 hourly, etc., etc. You can use all of these principles on any time frame that you want, provided that you've got the story. Okay, the story on how to do this is the most important thing. Understanding the story of how to do it, that's the most important part. Okay, finding the mid-range, finding the range high, making sure it's true, making sure you understand what a deviation is, making sure you understand why price is batting in between, seeing the deviation here, that helps me understand that price is truly trapped in between this. Okay, that truly helps me understand that price is ranging. Seeing a trend line like this helps me put the range together. So if I've got a range here and I see a trend line like this, it helps. Look at this pinpoint right here. Look at this pinpoint. So if I see price do something like this and then it retests that bit and then push up, I know I've got my stop loss there. I know that this is more of a high probability trade. I know now that price wants to target these highs. And not only do they want to target these highs, but it falls in line exactly with my ranges. So look at this high here. This high here falls at the mid-range. This high here is the deviation of the 75%. This high here is the range high. So you see what happens when you put the story together and how it comes together. Yeah? So as we see the S&P continue to go down, all right, from this article that we had here, where the Federal Reserve, to keep aggressively tightening monetary policies pressuring stocks. What does pressuring stocks mean? Pressuring stocks means that we're pressuring them to the downside. And as we continue to see the stocks push to the downside, we're going to see something like our favorite pair, Bitcoin, see the biggest hit. Okay? Bitcoin is what's going to take the biggest hit because Bitcoin is so correlated with stocks. So now with Bitcoin, now that we're 45 minutes into the show, we've spoken about CPI, we've spoken about the dollar, we've spoken about the S&P, we've spoken about the carnage the dollar has left behind. What does it mean for Bitcoin if we're going to see more pressure on the SPX? And if the SPX breaks the range, we can look to start targeting new lows. Fill in this inefficiency here. Why is this an inefficiency? Simple. Because of the range that we're in. So in the range that we're in, here's the range low, here's the 25% of the range, here's the mid range, here's the 75%, here's the 100%. Fair? Great. Now, we've got all sorts of bodily candles. Oh, what's happened here? Sorry about that, guys. Just bear with me one moment, everyone. Like and subscribe. If you haven't subscribed, now is the perfect time to do it. Just bear with me one moment, all right? Sorry about that, guys. I'm back. I'm back. Something's going on with my camera, but we're not using the camera today anyway, so it's fine. All right. For the purposes of this video, I'm leaving the camera off just because it makes it easier for you guys to see the screen, and we're talking so much about sort of data anyway today. All right. So look at all these bodily candles here we have inside of the range. Here on the daily time frame, we've got two wicks into the bottom of this range. Okay. So therefore, we're going to call this an inefficiency, a gap, so to speak. All right. Which means that we've got targets. We've got targets which falls into this bottom part of the range, but we've also got these lows here that were established when the market pushed back up. So we've got basic supply and demand here. So we've got um, demand which is going to fall in to this box here. Will it hold? No, probably not, because we had demand already here, didn't we? And it didn't print any bodies. So I'm guessing the next time that we come into this part of the range, we're going to probably fill these out, and we're probably going to do something along the lines of this. Okay. Now, if we look here, we've got supply, haven't we? We've got supply here, and we've seen that price came up and tapped into supply, and as soon as it got the amount of liquidity it needed, it sold off. Now it's selling off. It's still selling off. I did look for two long plans for Bitcoin, all right? And I did say that if we break below this level here, 20,280-ish, that it would be bad. Simply because we broke below the mid-range. If we've broken below the mid-range, what are we looking for in terms of targets? We're looking for these lows here, and we're looking for these lows here. Now, if something like this can unfold, then great. That's great, because we're in a range-bound environment. It's all good. But if we continue to go lower, if we break below this range, if we fill in this inefficiency and we start doing something like this, then unfortunately we're going to have to start bracing ourselves for the possibilities and probabilities of new lows. Okay? So that's where we are with Bitcoin. So if you guys haven't sort of understood where we are in this episode, this has been a great learning episode for you guys. All right? Um, my mic has gone echoey. Really? Hey guys, can you hear me now? Is it sounding better now? Let me have a look myself. Let me have a look myself. Hold on. The chart. Bear with me, guys. I'm just trying to understand. No, it's still really muffled. It's still really muffled. Anything now?